Hi, today I'm joined by Jazz from Shawbrook Bank, and I'll let him introduce himself.
Hi everyone, Jazz Bhogal, Shawbrook Bank, Strategic Relationship Manager, look after London and the South. Pleasure to be here.
Great. Jazz, you've been with the bank a long time. You've seen some changes. What are the current plans for the bank in respect of business that they're looking for?
Well, I mean, it's kind of business as usual, really, Carl. We've obviously been on a hell of a journey over the last sort of 15 years, nearly 15 years, I think it is, 13 years or so. Kind of started off kind of really in the commercial space, sort of doing trading. But now, obviously, from a real estate perspective, it's very much kind of business as usual. We've got dev finance, we've got bridging, buy-to-let, commercial trading on the horizon as well. So lots going on.
I think you know my background, and you know what I particularly like about Shawbrook is the short-term to term product.
Yeah.
So I think, why don't you tell them more about that?
Yeah, absolutely. I mean, it's a great sort of opportunity for investors to kind of come onto that journey with the bank, really, because you can come on with the bridging product, which is obviously the short-term, term-to-let sort of thing, where clients come in, investors come in, they want to see a property or, for acquisition. They may want to be in a situation where they want to do some improvements to that security or develop it perhaps, convert it to a HMO. There could be opportunities.
I think that's the gem of it all, is that people buying a basic house and converting it into a 6-bed HMO under PD. The beauty of it is your day one valuation will give you the GDV value.
Absolutely, yeah. And the great thing about it is you can take their client on that journey into the next step as well. So not only can they then kind of term that property out based on the GDV, they're in a situation where we can actually provide the term finance for them afterwards as well. So they've gone on that whole
Knowing the figures,
yeah. Day one, yeah. And using the same value and stuff as well.
Which is slightly unique in the bridging market, is that nothing's guaranteed, obviously, because circumstances can change. But you're going onto a bridge knowing your exit amount and who with.
Exactly.
Although, quite rightly, it's fair to everybody, they don't have to stay with you for the term.
Of course.
There's no tie-in.
Of course.
But the process is easier.
I think it's the peace of mind for the client, right? I think if they go into that bridge, obviously they have their plan with their GDV. If you go to another lender, for example, they may want another valuation.
Legal, solicitors.
Exactly.
A lot
could change.
And another thing which people need to take into account when on a bridge, going to a term, if you go to a different lender, the registration's got to be at the land registry, which could take 9 to 12 months.
Exactly that.
So you could finish the project, but not be able to get off it because of circumstances outside your control.
Plus, obviously, the client's with the bank now, so we've got their details, we've underwritten that case for them.
And you've got your charge.
Exactly, we're familiar with them, so it makes the kind of journey seamless from kind of bridge to term, really. So
I don't actually think enough people use it.
No.
Because they want the best product here, the best product there, but don't think about the overall cost that it costs. Nothing's perfect. No one's going to get the perfect product at the right price.
Exactly. I think the thing as well is we probably don't make enough noise about it ourselves, in fairness.
I know you don't.
Well, exactly. We don't make enough noise about it, but it is a hell of a product. It's something that literally the bank just churns out.
Also, just taking a step back, when I say about the valuation, even though they're buying a residential house, you do a red book valuation to confirm the current value, the cost of works is realistic, and the GDV. So everybody knows what you're going in at and what you're coming out
at.
at.
Yeah, the good thing is that you guys will provide a schedule of works to the valuer.
Only CPC.
Well, yeah, absolutely. CPC, of course, will provide a schedule of works to the valuer. So the valuer is going in there armed with knowing what the client's going to do to the security.
Yep.
So therefore they're confident they can provide that GDV. Now, I guess the beauty of going on that journey and taking the client on the exit with us as well is you can use the same valuer for the exit.
Yep.
So 9 out of 10 times, if they say a property is going to be worth X once the works have been done, the beauty of using the same valuer is that as long as the client's kind of stuck to the schedule, they know they're going to be able to term out on that value.
Now, when I speak to clients at the start, they're always going to finish it in 3 months, right? Sometimes it happens.
Yeah.
But more importantly, if they finish it within 6 months of the valuation, it will only be a re-inspection with you.
Absolutely.
So again, they save money.
And we have no ERCs either, right? So
so they don't have to stay.
They don't have to stay, yeah.
So overall, people should look at this product, make inquiries, and look to use it. And as I say, I don't think people use it enough or know enough about it.
I think that's the thing. I mean, like I said, from a bank perspective, it's something that we do all the time, and I know that you guys do a hell of a lot with us on that. But it's definitely something that people should be looking at.
Right. I'd like to thank Jazz for being with us today. Look out for more podcasts on all our social media outlets.